Hey, everybody, it's John King, and here I am with our weekly Financial Friday. It is noon on Friday, the 22nd of April, and I am currently enjoying another Mai Tai in Hawaii right now. Maybe it's not a Mai Tai. Maybe I'm just enjoying I don't know. It's got to be 9 o'clock in the morning in Hawaii right now. If you notice, the banner down below is telling you this broadcast is pre-recorded. So I have recorded this ahead of time so that I can give this to you as I promised every single Friday. I'm going to give you amazing information that you need as a homeowner, as a current homeowner, as a future homeowner, potential homeowner, lots of topics that we're going to cover. So make sure you check out the library. You can go to financialfridayslive.com and you can see all of my past broadcasts. You can see my future broadcasts that are coming up. Register for email updates to let you know what each broadcast is going to be. So today we are going to be talking about demystifying insurance. And we have a special guest with us today. So our special guest is Katie Yount of State Farm and her little boy
Hi.
who is hanging out with her as well.
Yeah.
Literally hanging out, right, Katie?
Yeah. He's my little buddy hanging out.
All right. And Xander, correct?
Correct. Yes.
And how old is Xander now?
He's 10 months.
10 months old. All right. Well, that is absolutely awesome. So Xander may chime in a little bit. Who knows? But anyway, guys, homeowners insurance is a topic that is super confusing. It is something that a lot of my clients just say, John, it's a must-have. Like I got accepted for a home. I've got an offer accepted. I've got 100 things that I'm trying to figure out right now between home inspections, the appraisal, getting updated paperwork for you guys, making sure that I qualify for my mortgage, let alone scheduling the movers and utilities and all the things that you have to do. And most of the time, insurance is just kind of oh, that's right, I need insurance. Okay, well, can you find me somebody cheap? That unfortunately is like the number one thing that my clients say to me, and it is the absolute scariest proposition because people don't understand insurance. They think that insurance is simply about, hey, it's a necessary evil, and I want to explain to you that yes, it is necessary. No, it's not evil, but it is something that you have to understand. And there is so much about insurance. So we're going to take a deep dive today. So you got another 57 minutes with us. Just as a reminder, because we're not broadcasting this live, I won't be able to respond to comments in real time. If you join me next week, I'll be talking about 6 steps to financial freedom. You'll be able to post comments live and I'll be responding to them. I can bring them up on screen while you post them and talk about your questions. But that doesn't mean I don't want you to ask questions. All it means is that I want you to post the questions, and then Katie and I will be monitoring this over the next couple of days and this weekend. And if you have questions, we'll respond to them. Um, you will also be able to reach out to Katie directly in a couple of minutes. We'll have Katie's contact information on the screen as well. So I want to start with who is Katie Yount? So, Katie, other than mom to amazing Xander, and that is not your only child, but I won't steal your thunder. Hi, Xander. Um, tell us who is Katie Yount and what is your little bit of your story?
Yeah, so I'm a local State Farm agent here in Fair Oaks. I do have Xander, who's 10 months, and I have a 7-year-old daughter as well too. So I've been in the insurance industry since 2007. So I have lots of experience. I have a passion for helping people and being involved in the community. So I love what I do. I love talking with people, educating people, and helping them protect what matters most to them.
I love it. I absolutely love it. Tell me a little bit about State Farm. And no, I'm not looking for the commercial. I'm not looking for the long-term history. But I guess I'll ask the question: why are you with State Farm?
Yeah, so State Farm is the number one auto and homeowner insurance company, and we're number one for a reason. State Farm is a very financially strong company, so if something happens, they pay out their claims, and they also really care about their customers as well. Like when COVID happened, they paid back like 2 billion in dividends back to the customers and things like that. So that's really why I love State Farm, the company, and they just stand behind what they say. If they're going to say they're going to do something, they honor it, and they're going to be there.
Got it. I love it. So let's tell me a little bit about the difference, and I hope you can give me an objective answer to this. But give me the difference between working with State Farm, if I'm a client, and I understand you with State Farm, and I think State Farm is absolutely amazing. I think for the most part, there's lots of amazing insurance companies. There's lots of amazing insurance agents. But what is the difference when I'm working with a State Farm, a Farmers, a Nationwide, somebody who is the insurance carrier versus the insurance broker? What are the pros and cons in your opinion?
Yeah, so like with State Farm, even though State Farm's a big nationwide company, each State Farm office is individually owned. So I'm a small business owner, so you really get that individualized customer service from my office. I'm a local person. You're not an 800 number that you're calling. And State Farm only sells State Farm, so I can only sell State Farm products versus a broker charges broker fees and things like that. And they can shop different insurance companies, but they can't shop State Farm. State Farm's you can only get State Farm products from a State Farm agent.
Got it. So really, it's very similar to the mortgage industry. Like you've got a mortgage bank, you've got large banks like the Wells Fargos of the world, you've got the brokers that have to send their business to the large banks like Wells Fargo, but they don't have control over the process. They're just the middleman who's connecting you with that bank. And then you've got direct lenders such as Summit Funding, where we're perfectly suited in the middle. And we deal directly with the people who supply the money, Fannie Mae, Freddie Mac, et cetera. And really, that's similar where there's nothing wrong with working with a mortgage broker. I think I'm better, but the truth is a mortgage broker, it serves a different role and ultimately can get you a mortgage just the same as I can get you a mortgage. And in different environments, there's pros and cons to working directly with a mortgage bank versus a big bank versus a mortgage broker. And the same thing I think is true in insurance. What I would say, guys, in the audience, is it's really about trusting the person that's giving you the advice. And Katie, tell me more about that. Like, how much does the insurance agent matter? Like, if it's you versus even somebody at State Farm down the street, and I won't name anybody at State Farm down the street, and I have no problem with anybody at a State Farm down the street,
Yeah.
but how much of the experience has to do with because it's you? And again, guys, I'm not trying to make this a Katie sales pitch. What I'm trying to say is, I believe that it matters not just what company you're working with, but who the agent is. Katie, do you agree or disagree, and
No,
why?
I completely agree. In my office, customer service is my number one priority. So I always make sure that my customers are taken care of. I want to keep the customers I have and make sure that they're happy and taken care of. And also, it's good to have an agent in your corner. If there's a claim situation and things aren't going right, I will fight for my customer. And my customer's best interest is what I have at heart, not the claims office. So I'll fight for them, making sure that, they get what is right. And I've had to step in plenty of times and, make it go right. So, and then, just having that relationship, I value meeting with my customers. I try to meet with them at least an annual basis just to make sure that we have the correct coverages in place. I'm educating them on what they need so they can make an informed decision.
Got it. So you talked about stepping in when somebody needs help on a claim.
Mhm.
Tell me about that. Like, does that happen very often? And is that a sign of a bad insurance company because you need to step in? Like, why does that happen?
Yeah, so State Farm does have one of the best claims uh, departments out there. But things do happen with claims, and sometimes it's a communication issue, or sometimes, the claims office is not understanding what's happening with the customer. So I'll step in to kind of make sure that everyone's on the same page, make sure that, my customer gets what they need. And it's not that it happens all the time and that the claims office is bad or anything like that. It's just a matter of it's a big claim department. State Farm's number one insurance company. So, there's a lot of claims that they're dealing with. So having that person that will step in and make sure everything is going the way it needs to be is very helpful.
Love it. Love it. Well, let's dive in a little bit and start talking about some specifics. So the biggest thing that I want to talk about, and I'm going to talk about a lot of insurance today. We're going to get into homeowners insurance, renters insurance, auto insurance, business insurance, life insurance. I really want this to be a comprehensive touch on a lot of different categories and things that you guys need to know about how insurance works. And so, from here forward, what I'll tell you is, Katie, I'd like for you to take your State Farm hat off. Doesn't mean I want you to speak. You love State Farm. I love State Farm. I use State Farm, but I want to talk just about the insurance industry and how things work, because this is really about educating my viewers and making sure that they have the right information they need to make a great decision.
Yeah,
And so could
definitely.
you just give me a 1 minute overview? What the heck, define homeowners insurance? Like, what is it? Why do I need it? What general things do I cover? Help me understand what homeowners insurance is.
Yeah, definitely. So, you spend a lot of time searching for a home, finding your dream home, getting into contract and all that. And so, sometimes the last thing you think about, like you said, just give me something cheap. But you want to make sure if something happens, fire, something falls on your house, that you have the proper coverage. You don't want to be in a situation where you didn't have enough coverage and now you can't rebuild your home and now you still have this mortgage. So you just don't want to be in that situation. So replacement cost is key when it comes to homeowner insurance. You want to make sure that you go through all the features of the house, and that will determine what the replacement cost is, and that's what you insure your house for. So for example, if the house burns down to the ground, how much is it going to cost to rebuild it? And that's what we want to insure it for. There's other coverages, liability, personal property coverage, some other endorsements that we can get into later. But the main thing really is the replacement cost on the house, and the liability, I think, would be the second most important as well too. And I knew you were asking how, what does it cover? So I said fire, something falling on the house, a tree falling on the house, a bad storm, theft, vandalism. Those are all some things that would be covered under the homeowner policy.
Got it. So let's go back and talk about replacement cost for a second. So replacement cost, here we are. It's April of 2022. We're dealing with inflation that is rampant, and it's hitting every single one of us in the pocketbook. Over the last couple of years, we saw little tidbits of inflation. We saw the price of lumber go up significantly and come back down some. We've seen appliance prices go up, and now this year we've seen prices of everything go up. My wife was just giving me a hard time. I have a vice. I love chips and salsa. Like, that is just my thing. And she said that the Tostito scoops, like, those are the chips that I love, is Tostito scoops. And and we ran out of chips, and she went to the store yesterday and she said, you're not allowed to have chips anymore. It's $4.50 for a bag of Tostito scoops. Um, I think it was $3 not too long ago. But anyway, my point is, I guess I'm going to have a great diet built in because I'm not allowed to have Tostito scoops anymore because of inflation. But the fact of the matter is, prices of everything are going up, and not just Tostito scoops. So how does that play into, define what replacement cost is? How do I decide what the replacement cost is? What happens when inflation goes up and the price of rebuilding the home goes up? Help me understand replacement cost.
Yeah, so that's why it's important to talk with your insurance agent about the replacement costs. They can put in all the information, and there's software in the system that will determine. And the software does take into account inflation and things like that. So if you have already homeowners insurance and it's been a while since you reviewed it, you want to, because chances are you need to increase it. And there's also a built-in inflation factor into the policy. So when prices go up, the policy will automatically increase a little bit, but that doesn't mean that it's increasing enough. So you really need to make sure that you're going through, and you put in, what's the exterior of the house, what type of flooring you have, what are countertops made of, what kind of roof do you have, what's the square footage of the house. All that goes into it, and then the software will calculate based on the construction rates and the building costs of today, and that's what will come up with the replacement cost.
So how do you know all of this? Like, again, most people are, John, just get me cheap insurance. And so, they call an 800 number and somebody gives them, okay, it's going to be this much money. How did they know what the floors are made of and what the countertops are made of?
Yeah, so I can tell you if that insurance company is just giving you a number and not asking those questions, There's an issue. You're probably not insured correctly. You could be overinsured or you could be underinsured, and either one is not a good place to be.
So I understand underinsured is bad because underinsured means my house burnt down and I can't rebuild it, right? Like there's not enough money there to rebuild the home. What exactly, I mean, overinsured logically says, okay, I have too much insurance. You said that's equally bad. Why?
Yeah, because you don't want to pay for something that's you're not going to get. So sometimes people say, just insure me for whatever my loan is. Okay, well, if your loan is 500,000, but your house is only 300,000, you're going to be paying that price for 500,000. But when it comes down to a claim, the max is only going to be 300,000. So you're paying that extra money for no reason. So it's just really a disservice to you just paying extra money when it's not going to be paid out to 500,000.
All right. So I bought a house for 500,000 and my loan amount is 300,000. I'm going to use exactly the opposite situation you just talked about.
Okay.
So am I insuring the $500,000 because that's what I bought it for? Am I insuring the $300,000 because that's how much I owe? Or am I insuring something different?
You're insuring something different. So the
That's
500,000,
confusing. Come on.
I know the 500,000 is the market value, which includes land and all that. And the 300,000 is your loan. So you want to probably going to fall in the middle, is the replacement cost. So that's where it's gonna, getting the features and figuring all that out is, so just think of, if I had to rebuild my house, not sell my house, rebuild my house, how much would it cost?
Okay. So you mentioned land. Why, when you said part of that 500,000 is land, why did you say that?
Because land is not insurable. So you're not insuring the land, you're only insuring the structure of the house.
Okay. And that's because if there was a claim, if the house burned down, the land didn't burn down. Like even
Correct.
if the land burned, the land is still there,
Right.
right? Okay.
Correct.
Got it. So that makes a lot of sense. So replacement cost, there was something that I see all the time, which is a percentage, and I see, oh, we have 150% replacement cost. Make sure you have that. What does that mean, and do I really need to have that?
Yeah, so a lot of companies, not all, so you want to check, but a lot of companies will have a 20% buffer automatically included. So you want to make sure that your house is exactly at replacement cost in order, because a lot of times it has to be exactly, it can't be below whatever the system is calculating. And then if you have it insured for that amount, you get that extra 20%. And there is an endorsement now that you can add on to actually have 50% above replacement costs if you want to, if you feel like, costs are just going up at a too much of a rapid speed and you want to make sure you have that extra buffer, you can do that as well.
So that goes back to inflation. So is that where that 20% buffer,
Correct.
50% buffer has to do with if there's a rise in the cost of materials or labor, and is that what it's covering for me?
Correct. So it's, like, and I use the example, the house burns down, you're rebuilding it, and it goes a little bit over what you insured your house for, you have that extra 20% that is also included.
Okay, got it. All right. So let's talk about liability. That was one of the things you talked about, that you said your homeowner's insurance covers liability. What is that? Define liability.
Yeah, so liability protects you from someone coming after you in a lawsuit. That's something that you were liable for. So, for example, someone comes over to your house, and they're out in your backyard and they trip and fall in a pothole that you had back there. They break a couple bones, and now they're trying to sue you for it. So having a proper liability in place will prevent that person, getting a lawyer and going after any assets that you have.
Now, will it prevent them from going after me, or it just means that the insurance will cover if they win?
Yeah, so they can still go after anybody, can sue anybody for anything, but it just prevents them from getting to your assets because if you have a large liability, then the insurance company would pay them out.
Okay. What about the legal fees? I mean, somebody sues me, is my insurance covering my legal fees, or do I have to pay for that and the insurance only helps me if I lose the court fight?
So they'll pay the legal fees no matter what. If someone takes you to court, they'll pay up the legal fees up to your limit of liability.
Okay, got it. So you brought up a really good point, limit of liability. Um, Gang, what I find is a lot of people who are searching for cheap insurance, they get really low limits on this. Wouldn't you agree, Katie?
Yes.
And the problem is now, is there a like in car insurance, and we'll talk about that in a couple minutes, but in car insurance, there's a mandate you have to have a certain dollar amount of coverage. On homeowners insurance, is there a mandate that says you have to have a certain dollar amount of liability coverage?
There's not a mandate, but usually the standard that comes with the homeowner insurance is 100,000, which
Okay.
really isn't very much at all. So you can increase that limit. There's also an umbrella policy that you could get as well too, which I highly recommend. That would give you $1 million or more that could extend off the home's liability.
Okay. So let's talk about umbrellas. You brought them up. So I think of an umbrella that protects me in a rainy day. Like I put it on and it makes sure that it's not raining. Define what an umbrella policy is and how it works.
Define what it covers.
Yeah, what is an umbrella policy? Like what's, I do I need one? Why do I need one? What is it?
Yeah, so it extends, like I said, from your homeowner policy and also from your car policies as well too. And then also if you have any rental properties or a boat or an RV, they call it umbrella because it covers all of those policies.
Okay.
And
Xander does not like umbrellas.
I know. You're okay. You're okay. Can I
Go for it? Do
drop him real quick?
Yes. Don't drop him. Do not. You are on live camera. Do not drop him.
What?
You're on live. Don't drop him. Then everybody will see you've got millions of people watching you drop your child right now. No, go ahead. Go ahead. Yes. So, guys, this really what we're talking about here is we're talking about the challenges that come up when somebody is shopping for super cheap insurance. And it is my biggest concern when if you are a homeowner and you have a policy that you had from before, did you ever have a conversation with your agent about these things? Did you talk about, hey, what's my liability coverage? And is it enough? You want to make sure that you're protecting not just what you think, oh man, $100,000, that's a lot. But the truth is, most people feel like, hey, I need to protect how much I have in assets, and I don't have $100,000 in the bank, and so I don't need to worry about protecting that, more than the $100,000. But you have to make sure that you're paying attention to somebody can put a lien against you that can attach future wages, that can attach future earnings. And so if you say, hey, I don't have $100,000 in assets, I don't need to worry about having 100,000 in liability. If somebody hurts themselves and they sue you for $500,000 and win, then they get your $100,000 in assets, and then you still owe them $400,000, and they can come after you for that. So don't mistake protecting your current assets from protecting yourself from the future. And so that's really why we're diving into this, because if you're not reviewing that, or if your circumstances have changed and you haven't talked to your insurance agent about it, this is why it's super, super important. All right, Katie is back. The baby was not dropped. Baby's fine, right?
Yeah, he's fine.
Okay. All right, good. So when we're talking about liability, we started talking about an umbrella, and that's obviously what got Xander going, because I know he has a thing about umbrellas. Just kidding. So help us understand what an umbrella policy is, and do I really need one?
Yeah, so like I was saying, it covers all of your policies and it's an extension of the liability. And so, yes, you do need one. If you have any type of asset that anyone could go after in a lawsuit, you need one. If you have a job and you're earning money, you actually need one, because in California, your wages can be attached up to 25%. If someone sues you and they win in a lawsuit. So I don't know about you, but I wouldn't want to lose 25% of my income over something that happened. So I have a story of a real life situation of one of my clients that had to use her umbrella policy. So she was driving her car. It was late at night, it's dark, it was a little rainy, so kind of hard to see out. And someone was crossing the street and she didn't see them and she hit that person. That person survived, but they had some serious injuries. injuries. And so now she called me and so thankful that she had the umbrella policy in place, because now State Farm is going to represent her, and she has that money to pay out for that person's injury. So you just never know what's going to happen, and it doesn't have to necessarily happen in your car or at your house for the umbrella policy to extend. You can be out somewhere. My husband likes to golf, so I say if he's out there golfing and he hits someone in the head in a golf ball and they get a concussion or something, your umbrella policy actually extends for that as well too. So anywhere that you're out and about where you may have accidentally created some type of situation that you'd be liable for.
Got it. I also think you should probably buy your husband some golf lessons to make sure he's not hitting anybody in the head with a golf
Right?
ball.
I know.
Right.
I know.
All right, love it. So your homeowner's insurance covers your home, but you said something about, when you're outside the home. So if I don't have an umbrella policy, and my wife would never be caught dead on a golf course, so I'm not worried about her hitting somebody in the head with a golf ball. But does my homeowner's insurance cover me for liabilities like that if something happens outside of my home, or is it literally only things that happen inside the house?
No, it would, same situation on the homeowner policy. It would, but if you only have 100,000 on your homeowner policy, like I said, that's not going to go very far. But yeah, it doesn't necessarily have to happen in the house.
Okay, got it. Love it. All right. So bottom line on homeowners insurance is it protects your house from things like fire. It protects you from somebody, from liability if somebody were to trip and fall on your property. What if they're uninvited? What if somebody jumps my fence and jumps into my backyard and then trips and falls? I didn't invite him in, so I'm not liable, am I?
You would think not, but in California you are. And there's been lots of situations and lawsuits where people have broken into someone's home, hurt themselves, sued the homeowner, and have won. So it happens, as crazy as it sounds, but the person does not have to be invited in order for you to be liable. Anything that happens on your property, you technically are liable for.
Okay, so I should just leave the front door unlocked so they don't have to worry about, cutting themselves on the glass when they break through the window.
There you go. Yeah, that's an option.
That isn't probably not a good option, but
Not a
it's
good option,
definitely an
but
option. Okay. All right. Got it. By the way, guys, just a reminder, this is pre-recorded. I am currently basking in the sun. Maybe I'm not. I'm probably on a hike with my wife right now. We love hiking when we're in Hawaii. So anyway, and as a matter of fact, speaking of golf, one of our favorite places to hike is an abandoned golf course. So we might actually be right now literally hiking on an abandoned golf course, and we're super having fun doing it. So if you have comments, if you have questions, post the comments wherever you're watching this. I will not be responding immediately because, again, I'm enjoying something in Hawaii right now, but I will be back on Monday. Future broadcasts will be back to being live recorded. But let's go ahead and switch gears and let's talk about renters insurance, Katie. So
okay.
First of all, as a homeowner, you have to have homeowners insurance unless you paid cash for your home, and then it's a choice, but you have to have homeowners insurance. In the state of California, you have to have car insurance, but you don't have to have renters insurance, do you?
No, you don't. You do not have to. So, well, some landlords do require you to have it.
Okay.
So if they do, you'll have to get it. But no, there's no law in California that says you have to have renter's insurance. I highly recommend it though. A lot of people think that if they're renting a house from their landlord, that their landlord's policy covers your things, which is not true. The landlord policy only covers the structure of the house, not the personal belongings of the renter. So if you think about it, if there is a fire, I use the example of fire because that's could happen very easily in California, and your stuff gets destroyed. Think of how much it would cost to replace your furniture, your clothing, any appliances that are attached to the house. That all can add up very quickly. So having that renter's insurance in place, is very beneficial so you can replace your things.
Okay. So just like my homeowner's insurance, I want to protect not just my homeowner's insurance protects the building and the landlord's coverage. The landlord will have coverage that will replace the building, but
Correct.
the insides, my clothing, my TV, all of that kind of stuff. If there's a fire, the landlord's insurance won't protect my stuff. It won't replace my stuff. And so that's where renter's insurance comes in. What
Correct.
about burglary? What about somebody breaking in? Am I covered by the landlord? Do I have to have separate coverage for that? Because this only covers fire. Help me understand, what does renter's insurance cover?
Yeah, so renter's insurance also covers theft as well too. So it's not only fire, it's also the theft and vandalism that would all be covered under the renter's policy.
Okay, got it. So really having a renter's policy is an extension. You okay? You got to take a quick break.
Yeah, I'll be right back.
No
Sorry.
problem. No problem at all. All right. So having a homeowners or renter's policy is really your version of having homeowners insurance. So it protects you from liability issues. It protects you from being sued, just like what we talked about earlier with renters insurance or homeowners insurance. And it's not very expensive. I'll have Katie share with us in a minute here when she comes back, and it looks like she is back now. Katie, how expensive is renters insurance?
It's actually not expensive at all. So, like just for example, for a 20,000 in personal property coverage, it's $10.83 a month. You can go up from there, and it slightly goes up, but it's very, very affordable to have. And for what it does to replace your things, it's totally worth it. And if you're thinking about buying a home, if you have renter's insurance in place already, it gives you a discount when you go to buy the home if you have it in place.
Got it. Is that, I said we weren't going to talk about your company the whole time, but is that something that is industry wide, or is that specific to your company, or is it kind of hit and miss?
So it's not all companies do it. State Farm does do it. There's a couple other out there that do it. But yeah, it's not everywhere. So you'd have to ask and find out.
Got it. Okay, but another good reason to ask that as you're interviewing insurance agents and figuring out who the right fit is. Remember, it is not about finding the cheapest coverage. It's about finding the person that understands you, understands what your needs are, is willing to take the time and talk with you about it. It's no different than finding a financial planner, somebody to guide you in your financial life. Your insurance agent really needs to be there to guide you in a lot of areas, and a lot of it having to do with your finances. Katie, anything you want to add about renter's insurance before we switch to auto?
So I just want to say that renter's insurance also gives you liability protection as well too. So say you accidentally, do some damage in your landlord's house, and your landlord comes after you because of it. So left the stove on and caused some damage, and there was a kitchen fire or something like that, and the landlord says, "Okay, you're responsible for these damages." Then your liability would come into play as well.
Got it. So $10 a month as a starting point is pretty cheap to have that kind of coverage and that kind of peace of mind. Yeah.
Yes, yes. And also, if you have stuff that is in your car that gets stolen out, that also would go under your renter's insurance as well.
Okay, let's back up for a second. So actually, that's a perfect transition to car insurance. So I own a car. Shocker. It's not with me right now. I didn't bring it over to Hawaii with me. I rented a car in Hawaii, which is another question I want to ask you about, which is when I'm renting a car. But I own my car. My car is broken into. They steal my car radio. So is that under what insurance covers that if they break in and steal the car radio?
So that would be under your car insurance because that's attached to the car. So anything that's attached to the car is under the car insurance.
Okay. And what about if they climb underneath and take the catalytic converter? Like, that's a crazy thing that's been happening for a long time. So is that covered under my car insurance?
Yes, that also is covered under, it's covered under the comprehensive portion of your car insurance.
Okay. But if I leave my cell phone and my jacket and my laptop computer in my car and those are stolen, are those covered under my auto insurance?
So no. So that would be covered under your renter's insurance if you have renter's insurance, or your homeowner's insurance. It is subject to your deductible though, so you have to keep that in mind if you have a higher deductible. But yeah, that would be covered under the renters or the homeowners.
Okay. So what about if I live with a friend, like I'm a roommate and I live with a friend, or I live with my parents. I'm an adult, but I've decided to move back home with mom and dad. can I still have that? I mean, am I covered under their homeowners insurance or renters insurance? Do I need my own if the lease isn't in my name? Are there options for me?
Yeah. So if it's a roommate situation, you need to have your own, definitely, because your roommate's covers won't, policy wouldn't cover yours. If it's a resident relative, there could possibly be some coverage from the homeowner policy. You have to be relative though, but sometimes it's better to have your homeowners in policy in place anyways, because you don't want to put a claim on your parents' homeowners insurance. So it's better to have your own if anything were to happen, so you don't have to use theirs.
Got it. Okay, perfect. So talking about auto insurance, and you said that covers under your collision. I think it's comprehensive. You said it's covered under your comprehensive was, if somebody broke in and stole my laptop and my phone. There are different categories of things I have to think about when I'm insuring my car, comprehensive being one of them. So can you give me the high level of the different types of auto insurance that I have to think about?
Yeah. So the number one, the most important coverage is liability. I know people think, oh, having collision coverage to cover my car. Yeah, that's great. You want to make sure that your car is protected, but you can have a bigger problem if you do not have enough liability. So that's really the most important thing. You want to make sure that that is where it needs to be. And there's a liability worksheet that you can do with your insurance agent to figure out how much you really need to protect your assets. And then, we have medical payments is also another important one, because that would cover you or anybody that's in your car, regardless of whose fault it was. So if you have a high deductible on your medical insurance, or maybe your insurance doesn't cover going to a chiropractor, having that medical payments coverage is really important as well too. And then the comprehensive covers if the car's stolen, vandalized, glass breakage, and collision is if gets into an accident. And then we have uninsured motorist coverage as well too, which is really important. That protects you, or pays for your medical payments if someone doesn't have insurance or they have really low limits. So that's another one. And there's the rental car and emergency roadside service. And there's even a small life insurance policy option you can add onto the car insurance as well.
Got it. Okay. So what's required? And it's funny, you talked about uninsured motorists, and you said if they are uninsured, well, first of all, the law is everybody has to be insured. So why do I need uninsured coverage if everybody has to have insurance?
Yeah, everybody does have to have insurance, but that doesn't mean that everybody does. And there could be that they didn't pay their insurance bill and they don't have insurance. We always hear those stories of someone lets something lapse and that's the day that something happens. So, it's the law, but that doesn't mean that more people are uninsured than you think.
Got it. Okay. So what are the requirements? What is mandatory for insurance coverage for the state of California?
Yeah, for the state of California, it's 15,000 per person, 30,000 per accident, and 5,000 for property damage. That's the state minimum that you have to have for liability, which is really, really low, especially the 5,000 for property damage. If you hit an expensive car, that could almost be a bumper. So, don't ever recommend anyone carrying the state minimum, but that's what it is in California.
Okay. So really it's about uninsured coverage is making sure that you have the correct coverage. By the way, Katie, your mic is a little bit, it's faded in and out a little bit, so I'm not sure on your end. No, but we'll see. It's okay. I think it'll be okay. Anyway, so uninsured motorist coverage is important because it's not just about uninsured, it's about being underinsured. So of the other categories, what's required? Is liability required by the state of California?
Liability is required. That's the only thing that is required.
Okay. So collision covers yourself, but you don't have to have that. So really you can drive around with liability coverage and the minimum coverage of $5,000, and now I'm going to be in trouble because I got hit by somebody and I've got medical bills that go significantly above that, and their insurance won't cover it. Is that what I'm understanding?
Correct. Yeah, so if someone has, the minimum or they don't have insurance and you have medicals, yeah, if you don't have medical payments on your policy, you're either going to have to take them to court and try to get it out of them, or yeah, you're going to have to pay out of pocket.
Okay, got it. All right. So when it comes to rental cars, am I covered? Like, so I'm in Hawaii right now, just finishing my amazing vacation. If something happens and I didn't buy the insurance through the rental car company, am I covered by my insurance with my auto insurance automatically? Is it sometimes I am, I never am? How does that work?
Yeah, so I'm not 100% sure if every insurance company extends coverages, so you want to ask and find that out. But I know most of them do. So all of your coverages that you have on your policy will extend to the rental car. So liability, comp, collision, everything you have on your policy extends. So you do not need to buy their extra insurance.
Okay, but that depends. You got to check with your insurance company. So if you're with State Farm, is that the case on all car insurance? Like if somebody has any State Farm auto policy, they're covered.
Correct.
Cool. Well, I hope I didn't sign up for pay for the extra insurance then through my rental car. All right. Perfect. So let's talk about life insurance. Life insurance is a conversation most people don't want to have. It's funny. One of the topics I'll be talking about on a future Financial Friday is estate planning. Nobody wants to think about death. Nobody wants to think about what's going to happen when I'm gone. Nobody wants to even admit that we're human and that we're not going to be here forever. So can you give us a 2-minute overview of life insurance? Obviously, why do I need it? Well, I'm going to be gone. So what's the point in life insurance? I'm not going to be here. But give me basically your understanding of how you explain life insurance to someone and what do we need to be thinking about?
Yeah, so life insurance is super important to make sure that your family is protected. So you want to think about, if you're not there, how does that look for your family? Are they going to be able to stay in the house? Do you want to make sure the mortgage is paid off? Do you have outstanding bills that you want to make sure is paid off? Do you want to set aside money for college for your kids to make sure they have that funds available? So there's all these things, and I usually sit down with my customers and really figure out what they want if something were to happen to them. Just to make sure that their family is protected and they can stay in the house. And maybe the spouse needs to take some time off work because they're grieving, and gives them the ability to do that. So it's so important, and you never know what's going to happen. And hopefully you'll never have to use it. I mean, eventually we're all going to have to use it one day, but especially for families that have kids, it's really important. And the younger you are, when you start it, the less expensive it is. So it's not, I hear people, oh, I'm young, I don't need it. No, that's the perfect time to start it. The younger you are, to get that locked in, because you buy life insurance with your age and your health. So you don't want to wait until you get diagnosed with something. At that point, it's too late and you can't get life insurance.
Got it. Got it. So help me understand. I hear these terms of term life insurance and whole life insurance, and I'm not sure there's an easy way to address this, but can you try? Like, help me understand what is the difference between a term policy and a whole life policy, and I think there's a third one that I'm still confused about.
Yeah, so I like to explain it as term is kind of like renting. So term is good for a higher death benefit for a low premium. So if you have, like mortgages and high things that you want to make sure is paid off, a term could be a good option for you, especially if you're looking at your budget. And whole life is more like buying a house. It accrues cash value. You can pull money out of it. It's more permanent. It is more expensive than the term. So it just kind of depends on what your needs are, and what you're looking at. And a lot of people do a combination of both. You can do both. You can do some term and some permanent life insurance as well, to cover your needs. But that's kind of how to explain it, to have people understand a little bit of the differences between that. There's also one called a return of premium, which it's kind of a hybrid in a sense where you pay for it for 20 or 30 years. If something happens to you within that time, the death benefit is paid out. But then if nothing happened to you, you get all of your money back that you put into it. So a lot of people like that one as well too.
Got it. Love it. Okay. So really life insurance is something that there's so many different choices and so many different ways to go about it that it really requires a conversation with somebody like you who really knows what they're talking about. So let's first of all, before I transition, is there anything else you want to add about life insurance?
No, just everybody needs it and it's important. And if you care about your family and there's someone that that you love, you want to put a life insurance policy in place to make sure that they're protected.
Okay, perfect. So let's transition to business insurance. By the way, Katie, I want to ask you just as a quick side note. I almost wonder, is there any chance you might have a headset that your computer or phone has picked up? Because it sounds like you're a little further away from the microphone than you were earlier, although you're right here. So is it possible there's a headset that it picked up, like a Bluetooth or something? Ooh, that fixed it.
Did that fix it?
A lot. Well, it's better. So yeah,
Okay.
I don't know what it was, but okay. Anyway, so let's keep going. So business insurance. Help me understand it. This is a huge area, and so we're gonna just touch on it very cursory touch. But I'm worried about not business, large businesses. That's a whole nother thing. I'm worried about the small business. I'm worried about, hey, I'm going to drive for Uber, or I'm going to run a business out of my house. And these are things that everybody has. You got a side gig. Everybody needs a side gig, and you do that out of your house. Do I need business insurance or not? Am I protected already? Help me understand that.
Yeah. So if you have a business in your home, you do need business insurance. There's limitations on your homeowner policy that business property is not covered. So you want to make sure you have that separate business policy for the liability portion and also any business property that you have. And there is policy specifically for a business in the home. So it's a reduced rate because you're not an actual location you have in your home. So that definitely do need that. Some people think, oh, my homeowner insurance will cover me, and that's not the case. Anything business related is excluded from the homeowner policy.
Okay. So what about my car insurance if I'm driving for Uber or DoorDash, Instacart? Am I covered? Am I not covered? How does that work?
Yeah, so if you are driving for Uber or Lyft, there's an endorsement that you have to add onto your policy in order for you to be covered. So very important, because if you do not have that endorsement on your policy, there could be no coverage if something were to happen while you were driving for Uber or Lyft. It's called an T&C endorsement. So just make sure that you ask your insurance company. Not all insurance companies offer it. So you have to find out if they do, and if they do, get it added on.
Got it. Perfect. Okay. So I want to, we got, 10 minutes left approximately. We may or may not need the whole amount of time. Help me understand the terms premium and deductible, and how did they play into each other? And I think this is pretty much true for any type of insurance where you've got maybe not life insurance, but for any type of insurance, you have a choice of how much is your deductible, and that plays with your premium. Can you define those words and help me understand how they work together?
Yeah, so the premium is the amount that you pay. So for auto, it's usually 6-month premium. On homeowners, it's usually an annual premium. And your deductible is the amount that you pay out of pocket. So for example, for car insurance, if you have a $500 deductible, if you get into a car accident and there's $10,000 worth of damage, yes, we will pay $9,500 to the body shop, and then you would pay the additional $500 to the body shop. Homeowner insurance, same thing. So a lot of times people opt to have a higher deductible on their homeowner insurance because they don't put in small claims. It's not good to put in small claims anyways, because each insurance company looks at claim frequency. So they'd rather have a little bit higher deductible. And then how that works is, so say you have a $5,000 deductible on your homeowner policy, and you have a large claim, it's $100,000 claim, then we just pay out $95,000. We minus out the $5,000 deductible.
So a high deductible is good because then I have low coverage, right? Or wrong?
You don't have low coverage. It's just the amount that you have to pay out of
Or
pocket. So if
premium, or low
you're
premium. Thank you. Sorry.
comfortable paying a little bit more out of pocket, it saves you on the premium. So the higher deductible, the lower the premium that you're paying.
Got it. Um, is that something, is it very expensive? Like, does it save me a lot of money if I change my deductible? How does that work?
It depends. Usually on car insurance, like the comprehensive deductible doesn't change very much. Collision, it could save you some money on the premium. And then the homeowner policy, having a higher deductible does save you quite a bit on the premium as well too. So you just have to think, if something were to happen, how much, am I comfortable paying out of pocket? Do I have 5,000 that I could pay out if something were to happen?
Got it. And really, a lot of it has to do with, are you even having the conversation with your insurance agent to understand your choices? And there are rules from the lender's perspective. The bank says, hey, I won't let you have that high of a deductible, because you have to understand, as a lender, we are worried that we have to make sure that you have coverage. We've insured, not insured. We've put a loan on a home, not a piece of land with burnt sticks on it. And we want to make sure that it's going to be rebuilt. And if you have a $20,000 deductible and you don't have the 20 grand, then there's no way that we can reasonably expect that home to be rebuilt. So there are limits on caps, I should say, on how much we would let a person have as a deductible on their homeowner's insurance. Perfect. All right. So let's talk about wildfires. That's a big hot button right now. It's obviously super scary with what's been happening over the last few years in California, and major concerns. How has that impacted the insurance company? What changes have happened? If you can give us a couple minutes and just an understanding of wildfires and what that means to insurance.
Yeah, so there's a lot of companies that are not writing in certain areas anymore because of the wildfires.
Define
There's a lot of
writing. What do you mean by writing?
so means we're not doing any more new business in certain areas.
So you won't issue
Um,
coverage for a new client in a certain area.
I'm sorry, what was that?
You won't issue coverage for a new client in certain insurance companies. A lot of insurance companies, you're saying, won't issue new policies in certain areas that are wildfire. So is that because that area has already burned? Or if I'm buying in an area that burned previously, then it's not a problem because lightning won't strike twice in the same place? Explain that.
Yeah, so they have what they call wildfire maps, and they just determine, is this area going? It doesn't necessarily have to have been burned before, but they have to calculate, okay, is this a high risk where there's a chance that it is going to burn? And a lot of insurance companies don't want to take on that risk. A lot of insurance companies actually are canceling people that have had homeowner insurance with them because they don't want to take on that risk in those areas. So there's not really, a way to say, oh, that place burned, so that's, not going to be good. You really have to check with the insurance company and have them run it in their system because each insurance company is different. Just because one insurance company says they won't do it does not mean another insurance company won't either. So check around. If all else fails, if you've checked with all the insurance companies and you just can't, find the coverage, there is the California Fair Plan that is available. With that, though, you do have to get a companion policy because the California Fair Plan only covers a structure, just very, very limited coverage. So you need to get a companion policy to make sure you have the liability and the other coverages covered.
Okay, so we're basically splitting out insurance for fire in wildfire areas. You sometimes have to have insurance that covers everything except wildfire, and then a separate policy, which might be the FAIR plan, that is covering for the wildfire. So that's when you say you have a companion because you need two policies to cover everything, right?
Correct.
Okay.
Correct.
So fair plan. Is it fair? Is that name appropriate? Like, why did explain what is the fair plan and is it really fair?
It's not fair, unfortunately.
Okay.
And it's sometimes the only option. And I feel for people that have to use it because it's a government insurance and it's just not very good coverage and it's really expensive, unfortunately. So that is, if you are thinking about buying a house and it could be potentially a wildfire, that is something to think about. You may want to check to see if you can get regular insurance before you go into that area, because people are not very happy when they have to get the California Fair Plan.
Got it. Okay. That makes perfect sense. So the couple of last questions I have, riders, like what is a rider? I think rider, and I think John Wayne, and he's riding his horseback through town. Like clearly that's not the rider we're talking about. So what's a rider on insurance, and do I need one?
Yeah, so it could be called a rider or an endorsement is another insurance term for it. And yeah, sometimes you do need it depending on your situation. So there's different ones that are available on like a homeowner policy. So I mentioned on the auto, the T&C endorsement. So if you're doing the Uber or Lyft, that would be a really good one to add on there. On the homeowner policy, we have one, and I don't know specifically if all insurance companies offer these. I can just tell you what I know State Farm offers on the endorsements. Um, but they have what they call a backup and sewer endorsement. So this is good, especially if your home is older. If the pipes back up at all and water comes in and causes damage in your house, if you don't have that endorsement, it's not covered. So that's a good one to have on there. Like I said, especially if it's an older house with older pipes. We have a child care endorsement. So if you have like a small in-home daycare, you want to have that endorsement added on there. We have the identity theft endorsement that you can add on your homeowner policy as well too. So that would cover up to $50,000 if your identity is stolen. It will pay for a lawyer to get it all situated for you and get, if they need to go to court and do whatever, that it pays for all of that. There's a special event endorsement you can also add on to a homeowner policy. So if you're having a one-day event somewhere, throwing a birthday party or a wedding, you can add that on for that extra liability. A lot of venues will require you to have that. You can always add that on. You don't have to go to a separate insurance company to get that. You can usually just add that onto your homeowner policy. There's a workers' comp endorsement that you can add onto your homeowner policy if you have residence employees. So if you have a live-in maid or something like that, you can add that endorsement on there.
Love it. So the other thing that comes to mind is expensive belongings, jewelry, artwork, things like that. That if I understand correctly, like I've got coverage for my belongings, but the coverage is limited and limited maybe per piece. So there's times when I need to get coverage for if I have artwork, if I have expensive jewelry, anything like that. That's another thing that we would need to talk about in endorsement. Is that correct?
Correct. Yeah. So jewelry, there's limitations. So like 1,500 per piece, max 5,000 if you do the increased limit on that one. So definitely, if you have high price jewelry items, you want to get that. It's called a personal articles policy. You can add on there. Firearms, there's a limitation on the homeowner policy. Artwork, fine artwork, collectibles. That's all has limitations on there. So if you have high price items like that, it's always best to get them insured separately.
Got it. So the last thing I want to talk about real quick is changing insurance companies. So we've got a minute left here, and especially for homeowners insurance, people feel like, hey, I got my homeowners insurance as part of my mortgage, and they make the payment every month for me, or I make the payment to them, and so I'm stuck. Like that's who I'm using. Is that true? And if not, how hard is it to change insurance companies if you feel like you're not getting the service that you need from your current insurance company?
Yeah, it's actually pretty easy. A lot of people always get scared of that. Oh, it's going to be a big hassle. But really, all you have to do is let the mortgage company know I'm switching insurance companies. And then, I usually handle everything on the back end. They get a refund from the old one, and then they turn around and pay us. So, really, not much of a hassle other than you just notify the mortgage company that I'm switching, this is happening, and then everything else is taken care of.
Got it. Love it. Katie, this has been absolutely fantastic. Any parting thoughts, any final thoughts that you think we didn't cover or things people need to know as they think about insurance in general?
No, we covered a lot of information. I'm always available though. If you have any questions, you can reach out to me. I'll be more than happy to
Your
answer any
information's right
questions you
there.
may have.
Going
Yeah, there you
right
go.
here. Okay.
Yeah.
Perfect. Gang, I really appreciate it. This has been fantastic. We're coming up right on the hour right now. It is almost 10 o'clock in Hawaii time, so I need to go get back to my Mai Tais. I am looking forward to seeing you guys next week. We're going to be talking about the 6 steps to financial freedom. Here's the deal. I helped you get into, or I'm going to help you get into the biggest debt you ever get into in your life. And I feel it's my obligation to help you get out of that debt. So we're going to talk about strategies on, where do you put your money when should I be worried about paying down my credit cards first, or should I be putting money into my savings account for a rainy day? Should I invest in my 401k, or should I invest in the stock market? I'm going to talk about a lot of things that will help you start getting the creative juices going and ways to think about money a little bit different, because my goal really is to help you to achieve wealth through homeownership. So if you're currently a client or you want to become one in the future, either way, I want to help you to use your money appropriately and to build wealth through being a homeowner. So, Katie, appreciate that. Hope you'll join next week as well as an audience member.
Yeah.
And guys, have any questions? Feel free to reach out to Katie. Katie, I hope you have a wonderful weekend, and we'll talk to y'all soon.
You
Bye
too.
bye.
Thanks,